Good afternoon, everybody. Welcome to the TraderMerlin show. It is your Thursday edition. Sweaty Thursday up here in my upstairs studio. Man, I didn't even do my hair today. It's how it's been. Hope you all had a fantastic trading day out there, even with these weird, seemingly not volatile markets, and all of a sudden we had some nice volatility popped in near the end. So all in all, a decent day, at least some nice positive green numbers for most of the market, except for gold, which is good news for me as a small portion of my holdings. For those of you who might be new, hit that subscribe button. That will help my viewership as well as notify you when we have live shows, which are 2 p.m. Pacific, Monday through Friday, unless otherwise noted. I may have to take next Thursday off, but we'll let you guys know about that one next week. So today's show, what I'm going to do is I'm going to start with the question that was sent in, and then I'm going to drive into the markets at the end of it, and I'll kind of do markets near the wrap-up. And yes, of course, Queen Elizabeth II, sad to see her go. I actually liked her, and I like royalty. It was a sad one. At 96, though. She made 96. So a cheers, a salute to Queen Elizabeth and the UK today. Obviously, a very sad day over there. It's interesting, kind of diverging off topic here. It's always interesting to be part of events that we've never been accustomed to. So, for example, here in the United States, we have a presidential election. We don't have a monarchy or anything like that. And what's noteworthy, if you go to some place like Amsterdam or Holland or England, the amount of national pride generally there is for the reigning monarch. And I was fortunate enough to have been in Holland when they coronated their king. I think it's just one of those things on my list of things you've done in your life that you check off. And so, I was there for the coronation, the crowning of a new king. I was in Italy when the Pope passed away, and when they did the whole process of the white smoke and the gray smoke and all that. Unfortunately, I couldn't make it to Rome. I was trying to get to Rome when that was all going on because, what a piece of history. How often can you say you were a part of something like that? So, as you guys know, in 2 weeks, gosh, is it 2 weeks already? 3 weeks, I'll be going over to Europe, and I've got my fingers crossed that it will be the coronation of the king again in England, and maybe I'll end up flying over there and say, I've been to 2 king coronations. It's a fun event. It was all it's very interesting to see how the national pride is there and everything. So if you ever have the opportunity, I would encourage you to check something out. If you can get to England for the coronation of the king, you should probably check that out. All right, you like the order of answering questions, then market review? Yeah, you know what, and the problem with that, Eric, is a lot of people think I'm doing clickbait because I put a topic up and then I get to it later. So let's just dive right in with the topic. So here is the topic for today. Should you use market screeners? And this is a very opinionated piece. This isn't like, oh, you should absolutely be using screeners or you should not. It's a matter of personal preference. But I think you guys have noticed by now that my approach to the markets is your goal as a trader should be to do as minimal work as possible and let tools and resources do as much work as possible for you. And that's my view on scanners and filters. But that said, let me read the question that came in. And Tom, thank you very much for the question and the support over the years. It's been years now. He says, I trade SPX every day and know some of its daily patterns and other things that may cause movement beyond what my trades are built for. A number of guests have covered screening for opportunities that can be from thousands of tickers to reviewing lists with 100 or more different companies. My concern over screening for unknown companies provides a list of opportunities while missing some important information like new product announcements, drug approval, a split, a dividend, a takeover, or some other significant event. My question is, could you talk about the pluses and minuses of focusing on one equity, natural gas, SPX, yen, etc., versus screening watch lists for thousands and thousands of stocks? Okay, so let me start off by giving you a little bit of a background story. Now, this one I really liked. There was a period of time, my old mentor that taught my first class at Online Trading Academy back in 1998, just an absolutely fantastic guy. He was teaching a class in Irvine, California, and I think it was 2005 or 2006. And you know how the physical classrooms are, guys. We've got these physical classrooms of 20 or 30 students. There's a big screen up front. The instructor, walks around and teaches. Well, it was interesting because that specific day, the power went out right as this guy was teaching. And it was on the weekend. Markets are closed. So in an act of brilliance, and honestly it might have been one of the greatest things I've ever seen, is from memory, this instructor drew out 2 weeks of the S&P 500 on 60-minute candles on the chalkboard or on the whiteboard. Now, I don't know if you understand how crazy of a feat that is to go from memory and say, I know what has happened every single day, pretty much every moment of the day for the past 2 weeks. And when the power came back on, they ended up looking at the actual chart, the real chart versus his. And I would say it was probably 95% accurate, which is astounding, absolutely incredible. And why am I bringing that up? Because this guy was an individual who focused on just a few markets. And for him, the S&P 500 was the dog that wags the tail. So he knew that thing inside and out. And I think that to Tom's point here, you're probably getting that sort of understanding and muscle memory of the S&P 500. You can see its moves. And every security that we look at, whether it's a commodity, an equity, a futures, options, a cryptocurrency, they all have their certain dynamic way that they react to supply and demand, maybe institutional involvement. So if you focus on one thing, generally you can get a greater understanding of the technical side, which is important. And if you care, you could be looking at the fundamental side of things. So what changed for me when I witnessed, well, I actually was doing this much longer before that event, but it really made me realize how critical it is to focus on something. Back in the late 90s, I started focusing on one security at a time, and I would day trade it. So I think it's a little bit different back then versus today. But I was doing high-speed day trading, several hundred trades per day in the same ticker symbol. So, it was ETRD was one of the ones I traded for about 2 years. And then it was BRCM, Broadcom. And then it was Juniper, JNPR. For some reason, I found that I was winning with those. I found I was profitable with those. So I just stuck with them and, put blinders on. Who cares about everything else? And to Tom's point, I actually started getting really good at understanding the behavior of that security. And why is that? It's kind of like we're all, let's say that, I don't know how many, we got only 47. It's a light day today. People are mourning the queen. Let's say we got 47 people in here. We just ticked down to 46, so apparently I offended someone and they decided to leave. I got 46 people in here. Let's say we're all in a room. If we're all in a room for one day, we're not going to learn much about each other at all. But if I'm in that same room with all of you every day, all day, for, let's say, a year, next thing you know, I can tell that, Rob tends to be the one that gets a little bit temperamental, and Chris is really laid back and doesn't participate, and Margaret, well, she's really all of a sudden, in everybody's face. I'm making it all up, but, you get my point. You start to learn how everybody acts and reacts to certain situations. And behind the trade that I'm making, let's say I'm in E-Trade, for example, if I'm trading that, behind that, there's generally the same people at Goldman that are trading E-Trade. When I went onto the floor in Dallas, Texas, I went to the Southwest Securities firm. Basically, every one of their traders would be assigned 30 or 40 stocks. And that was, if an order came through for that stock, it would go to this person. So it's always that same person. And you can see the behavioral analysis. You can see how they act. And, your personality will reflect in your trading style. Now, you or me are not going to have really that big of an impact on the market. But when I'm looking at an institution like a Southwest Securities or a Goldman Sachs or JP Morgan, and they have an attitude, you can see markets move and you start to learn from that. So right away, I will tell you, I'm a huge fan of trading 1 or 2 or 3 things. Keep it really simple and small. Now, to get to Tom's question, which I think is a really good thing, is, kind of why would you do that? What's the plus and minuses of focusing on one equity, let's say an index or gas or whatever, versus screening a watch list for thousands? And it's really important for me to look at it from the perspective of opportunity. We have all looked at a security, and pick any name you want, looked at that security and went, that's really doing nothing. It's flatline, right? Boring. Oh, yawn fest over there today. Well, if that's the case, you got to move on, right? If you look at something like, here's gold for today. Now, gold actually had some decent swings. This is the gold futures product. But after that initial sell-off, it just went flatline. Well, okay, I might be exaggerating a little bit. Not quite flatline, but certainly was very boring. And then you look at some of these indexes, they had much wilder swings and, in my opinion, much more opportunity. So I think that it's important to look at a watch list. You guys notice that here, I've got a few markets that I'm actively watching. We always start with these top 7, which I think are critical, and that's to look at gold. I look at the major 4 market indexes, which is the NASDAQ, the Dow, S&P, and the Russell. I look at crude oil, and I look at Bitcoin. But you look down below, I've got other things that help me, like the dollar index. I like to glance at the currency markets just because. And then obviously I like crypto. So you can see here I've got a lot of different cryptocurrencies. I don't trade all of these, but I am invested long term in them, so I like to watch the charts. I also like to see how interest rates are moving to impact the market, commodities, and then down here I have my sector watch list. I would say that if I was actively trading, it depends what I was trading, but I would predominantly focus on the sector ETFs and the index futures. Now, how would I create a filter to make it better for me? So I definitely use filters, especially when I'm active, because I have to make sure that certain things don't show up on my plate. It's kind of like saying, I've got gluten issues and certain allergies towards foods. I can't just let every food that comes my way land on my plate because I might die. So I want to make sure that what comes and lands on my plate are things that fit me. So let me walk you through just a real quick example here of watch list. So what I did here is I added the S&P 500. So I've got all 500 S&P positions. And actually, if you'll notice, do I have your screen? Yeah, I am sharing my screen with you. Let me delete that one, delete this one. We'll scroll to the bottom here. The S&P 500 right now has 503 different companies in it. So there you go. It's the S&P 503. Robert says, do you look at VIX? I do look at it, but I don't really use it to make trades anymore. It's something that I simply look at real quick to see what the fear is. Kind of like this. Let me ask you this one, Robert. If you drive a manual transmission, right? So you got yourself a 68 Corvette, and it's got a stick shift. Do you look at the tachometer to see what the RPMs are, or do you just kind of know it in your head? Most people that start out are always looking at the tachometer because, your parents say, when it gets to 3,500 RPM, shift to the next gear, right? After a while, you don't need that. And if you just look at the S&P 500, simply stare at that S&P 500 chart, you'll know what the VIX is doing. So I don't really use it anymore. I like to look at it because I know other traders use it as a basis for trades, but it's not a very key component for me. Okay, Liz says, beware the wash sale rule if that applies to you. Correct. Yeah, wash sale rule is certainly an important one if you're doing a lot of trading. That's why trader status is an important one, and I am working on getting a trader in taxation on the program. Okay, so what I did is add in the S&P 500. So I created a watch list. Let me know if this is too big, too small. I know sometimes it's hard to see all the fonts and everything. If it's too little, I can make it a little bit bigger for you guys if you would like. So I added in those 500 securities, and I'm looking across the top here, and all I'm doing is try to set up a filter for us. And what I've done is I've got average daily volume. I have right here average true range. And then I also added an industry because what I'm going to show you right now is my specific rules for a filter. So number one for me is liquidity. I have to make sure that whatever I'm going to be trading has enough trading activity to absorb whatever I throw at it. So if I want to trade 3,000 shares of this thing, I want to make sure that when I do that, it's not going to move that market, right? It has to be able to absorb my orders without moving. Now, if you're trading 100 shares, this may not be as applicable, but if you're trading big, it certainly is important. So notice here, average volume. What's the wash sale rule mean? So there's a specific rule in the financial markets called the wash sale that if you buy a security, so let's say, and I'm making up numbers. Let's say I bought stock XYZ at 100. And I sold XYZ at 90, so I lost $10 per share. If you can't buy it again and claim that loss. They're trying to prevent you from claiming losses. It was kind of a tax little loophole that people were doing. I think it's for 90 days. That you can't buy that same security that you just sold. So what had happened is near the year end, people would just sell all their losing positions, claim the tax loss, and then buy right back in. Just to drop their tax exposure. So that's the wash sale. And you can get around the wash sale if you are in trader status, also with futures. It's 30 days. Thanks, Lori. For some reason, 90 stuck in my head. It's 30 days you can't buy that same security again. That's the gist of it. So for me, average daily volume. And you can see I've got three numbers here. The one I'm focusing on is the middle one, which is volume average. Now, we can go and I think this is for like the last 30 days volume. So I'm going to click here and look, NVR Construction Services, it traded 88 shares. I don't. Oh, I'm sorry. This is on the. This is a 5-minute time frame. Let's make sure we change that. 88 shares would be insane to even think about trading that. So let me start over here again. Average volume. I'll scroll up to the top. So one of the lowest ones here is J. Don't even know what J is. It's Jacobs Solutions apparently. Traded 468,000. That's way too low for me personally. So what I like to do is I take anything that's under 1.5 million out. And notice NVR is only 16,000 shares traded per day. I can't trade that. That's just not liquid enough for me. And it's not, just so you understand, it's not just because your orders might move the market. It's the actual orders in the market itself. Remember we looked at that level 2 the other day. In that level 2 screen, you usually have buyers at every 1 penny increment, or buyers or sellers. When you have something that's as illiquid as NVR, quite often they're not penny increments anymore. They're like nickels, dimes, quarters. So all of a sudden, 100 shares could transact, and all of a sudden price drops by 50 cents. Wait a minute, why? Because there's just so few buyers or sellers. So that's the first piece, is making sure I get rid of all these. So let me get rid of everything up to, oh, are you kidding me? Now it's taking forever to load. Well, great. Right as I want to do this example, and it's not my internet, folks. This is TradeStation. TradeStation always seems to be slow at loading these lists because I have fiber right now and I am rocking. I am getting full speed internet right now. So I will leave that there for a second, and hopefully some of these things will load up. This is ridiculous. Thank you, TradeStation. It's probably why I don't use you much anymore. So number one is I want to make sure liquidity is a factor. So I personally remove anything under 1.5 million shares average per day and just kick it to the curb. Now, I may be removing some great companies. I don't care. Remember, I'm not in this because I love the companies that I'm buying or selling. I'm in this because I'm trying to make money off of something. So I want to make sure that the liquidity is there. Number two is price. I remove anything under $15. And that one's not as critical, but remember, I like to trade things from a long perspective and from a short perspective. So I want to make sure that I have meat on the bones to go long or short. And if something's at $15, do I really have a lot of potential downside? It starts to get real risky, if you know what I mean, right? So shorting something that's at 15, why is this taking forever? I don't get it. Oh, there we go. I don't know why it was taking forever, but I just hit resume sort and it continued on. So, demonstrations as well, too many issues. Yeah, I know, Todd. I love the platform. I love the filters, the scanners. I mean, it has so many great tools and resources you can use, but it has just way too many bugs. Like, look, I'm still waiting for this thing to load up. It's insane. All right, so you can see it's only like one every 3 seconds. So by the time we finish the show, my watch list should be updated. Thank you, TradeStation. But you can see I've got it sorted so the new ones pop into the top. Goldman Sachs only trades 2 million shares a day. Well, it's $335, so that's probably not too much of a stretch. But I will keep clicking this one, and we'll go from there. So what I'd also do is I go here to last, a double click, and I take anything under $15 out. That is just my personal preference. That may not be a big thing for you, so that's fine. You know, it's just, I'm just explaining kind of my criteria. Next, so I've got average daily volume. I want it to be at least 1.5 million. I want to make sure price is above $15. And then I start to look at a couple other unique pieces. For me, you guys know in my trading plan, I am not allowed to trade biotechs or pharmaceuticals. So I would click on this column under industry. And let's see. Nothing so far is showing. Well, I have scientific and technical instruments. That's okay. Eventually, we will see some biotech and pharmaceuticals. I remove those just out of spite. That is my personal grudge. Over the years, I have had horrible luck, massive losses from biotechs and pharmaceutical stocks. So I don't want to know why the reason is. It is what it is. I'll move on to something else. Chris says, Merlin, is that just for stocks or can you do it to futures as well? ATRs. Yeah, you can do it for both of them, sure. You know, when I have, in this example, you know, I'm using last price. Price isn't so relevant with regards to futures markets. Volume is, right? You might be trading, you know, live cattle and all of a sudden you're like, wait a minute, why is this thing slipping me so much? Because there's no volume, right? This is why, when I look at futures, I am predominantly in the S&P. That's like my favorite futures contract. S&P and the NASDAQ, because there's tremendous liquidity. The other piece here is average true range, right? This was much more relevant when I was a day trader. You guys can see here, moving 50 cents a day. So if I'm trading, let's say 1,000 shares, and I capture one full ATR, I'd make $530 minus commissions. Okay, that's fine. But you'll see some securities that have like a 5-cent ATR. What are you going to do with 5 cents, right? There's not enough fluctuation on average for me to attempt to make a trade on that security, right? That's really important. And I kind of think it's funny that my friend Chris is here. Chris, I hope your mother is doing well. Sorry to hear how things are going on there. But, Chris has got a machine shop mechanic up in Marin County, Northern California. And, I kind of look at it the same way. Like if this was a list of customers, right? You have a list of customers here, and I've got one customer that's, I'm going to potentially earn $11 on that customer versus I got another customer I might earn 50 cents. Well, I'd much rather be focusing on the ones where I have opportunity for me to make a profit. And that's simply what ATR helps you illustrate. Now, normally, guys, your expensive stocks have a higher ATR. If you look at the cheaper ones, they're going to have a smaller ATR. Now, it would be nice if there was kind of a percentage gauge, which you could say, what is the ATR percentage? But there is not that calculation yet in TradeStation. We could probably do it manually, but I do not understand easy language and will not be writing code. So there goes that. Yeah, crude oil. I do like crude oil as well. I don't trade it as much as some of the other stuff, but every now and again I will pop off on a crude oil trade for sure. I mean, how could you not? That thing is great, trades a tremendous amount. Okay. We're slowly populating here. I'm going to see if I can whittle this down. I was kind of hoping we could have done the whole list, right? You notice that there's been some more that have popped in here that are outside my realm. And TAP, it trades an average of 1.489. You're like, but it's so close. Close only works with hand grenades. So there you go. That's my basic filter I like to use. And again, biotech, pharmaceuticals. I haven't seen any pop in here yet, but they will. Now, the main reason for this is I don't want to have, as Tom says, 500 plus things to look at. Now, to his question earlier as to could you talk about the pluses and minuses of focusing on one equity versus, or screening your watch list? Here they are. The pros of focusing on one security is you start to really understand it. You know when it moves, how it moves. Hell, you'll even understand the time of day. You're like, what? You're watching your watch on the S&P sometimes. You go, okay, right around now, it usually has a little bit of a dip because whatever order flow is coming through. Yep, there we go. And all of a sudden the market sells up. I mean, it can be like that at times. I think you start to learn especially when I was watching the level 2 screen, I would see what the other people were doing and really understand institutional sales within that level 2 screen. So you start to get into real familiarity with that security. If you are trading individual securities, you'll never be able to avoid the random announcement, the dividends, the earnings, those types of things, unless you check them all the time. If you look at like an ETF, which is one of my favorite trading vehicles, then that will prevent you from getting caught on an earnings announcement or a dividend payment or just some random news that comes out and all of a sudden, one security drops. Well, I got 503. Who cares if one drops 50%? Unless it's Apple, of course. So I love that. The only challenge, the negative of a single stock, Tom and others, is when you're in that dimension of one security only, you might not be getting a sense of the whole picture on how this whole machine is working. That's a problem for me. As well as what happens when your security that you're watching decides to just lay down and do nothing and really just go flat. And you're like, there's really no opportunity here. Well, maybe at that point, I want to look to a watch list, maybe an abbreviated watch list, not 500 securities, but maybe 10 or 15 that I think are great. And if I can spot an opportunity there, maybe make trades on those. So to fix Tom's question, which is, let's see, a number of guests have covered screening for opportunities that can be from thousands of companies. My concern is over screening unknown companies provides a list of opportunities while missing some important information, like product announcements, drug approval, a split, and a dividend, a takeover, and some other significant events. If that's the case, then make your watch list all ETFs, right? Make them baskets, XLE, XLF, XLY, XLU, XLK, make them those. Therefore, when the markets do go flat, there may be an opportunity in a specific market segment that isn't flat, right? So at a minimum, I would say if you are someone who focuses on one security, and especially Tom, because you do a lot of options on the index, I would have a watch list, just like I have here. Let me show you real quick. Just like I have here at the bottom, maybe I just have those, XLF. So I've got financials, healthcare, building materials, consumer staples, or consumer discretionary, energy, technology, industrials, real estate, utilities. Maybe add a couple more, but I'm not overdoing it because now I can really quickly, in a short period of time, maybe we'll just show you here. In a short period of time, I can just glance through here and see, are there opportunities on some of these? Now, of course, if you're all in these spiders, they're all most likely going to have the same basic trajectory, but there will be some that have much greater rates of return. Look at the difference today. Financials are up 1.76%, and utilities were down 0.08%. Well, that's a huge spread, and they're both in the S&P 500. I can see when institutional SPX traders go to lunch. Yeah, that's true. Well, it's a combination of institutional order, institution guys taking it easy, but also order flow has been filled. And normally in a regular market, you're going to get heavy volume in the morning, heavy volume at night, and that creates those big swings. And the middle of the day, most of the orders have already been filled, and it's just kind of flatlined. So there you go. Use Pareto's 80-20 rule. Focus on the 20% that make you the most profit and cut the rest of the noise out. Yeah. And in that example where I'm building this watch list in TradeStation, and let's see how far we've gotten. Hopefully we can continue to build this thing out. How far have I gotten? It's just unbelievable. Out of how many do we have left? I have 469 left, or total, and it's only done 59. It's just absolutely ridiculous. TradeStation, you gotta fix this. Maybe they're not supporting this old version. I like to use TradeStation 9.0. I know 10.0 is way better, but I'm old school. It's the way I do it. Okay. So yeah, I agree with you, Joe. I think, and it's not necessarily just the 80-20. It's, if we focus on too many things, I don't think you'll be, it's the old, what is it? There's an old phrase. It's something like master knows about many or master of none or something like that. Become a master on one thing. I think that's great, but always have a fallback so when that one doesn't work, you have others. There's a lot of different styles out there that I've seen over the years, some of which are absolutely fantastic with regards to using scanners and watch lists and finding opportunities, especially in strong trending markets. But for most people, especially those starting out, you don't need all that. You can stick with something very simple. This watch list like this is great. Just get it down to a few. And part of it for me was, there you go. Thank you, Lori. For some reason, I'm just drawing blanks. I'm getting old as I approach my milestone birthday here. Jack of all trades, master of none. That's it. All you guys know it. I apparently just could not dig that one out of my brain. Yeah, and TradeStation is obviously you have to pay for TradeStation. FinViz as a great screener as well. There's a bunch, but FinViz is probably one of the better screeners out there that's available to the retail population. I'm just disappointed it's taking forever. I was kind of hoping to finish this because I always like going through it and say, okay, we started with 500 and now we have 280. My guess would probably be 3. It's the heat, Lori. It's the heat. It's causing my brain to skip up here. Anyway, for Tom and O's, that's kind of the gist of it. I won't beleaguer the point because it'll just take forever for this thing to get loaded up here. Maybe I can show you in FinViz. But I actually like having a lot of things to look at. And not maybe a lot. Maybe it might be the wrong word. But I like having multiple things to look at because it may present me with opportunities. You notice how I've got a lot of different markets here. And I may be looking through and not really paying attention. Well, there's silver today. Oh, there's platinum. Well, platinum, from a strength perspective, was way stronger than silver. Maybe I'll go long on that one. How old do I feel? It's funny you say that. So the 24-hour fitness does this thing called MODUS, which is like it's a high intensity interval training program. And I'm on a 7-day trial of it, and the legs day was on Tuesday. And I got chicken legs. I'm like most guys. Most guys have chicken legs and they work on their upper bodies. Women usually have weak upper bodies and have, nice legs. Battle of the sexes, I guess. Anyway, I did the leg day on Tuesday, and my office is upstairs. I'm struggling to get upstairs. It was tough. It was tough, but yeah, I feel old today. Like, it takes me a second to get up. My legs hurt so bad, but hopefully it'll pay off in the long run, right? My birthday is October 26th. That's the day when my parents blessed me into this world. But this is why I like having multiple things to look at. It's just the key, Tom, and others, is don't have too many. If someone comes up and is like, hey, man, you got to check out this penny stock, and you add it to your watch list, don't. You want stuff that has opportunity. All of these sector ETFs are fairly liquid. Some are more liquid than others, of course, but these are generally pretty liquid. I don't have to worry about any one security in them messing me up, meaning, as Tom pointed out, an earnings announcement or a dividend payment. That's not going to really impact these very much. One company, because they're so diversified. So, yeah, it's older. I'm not old yet. I'm just getting older. But anyway, if you have questions for me, fire them away. I'd be happy to answer whatever questions you have. But it's a great question, Tom. And, when I started off back in 98 on that trading floor, it was literally looking at anything that was moving. I was trading every single thing under the sun. If CNBC TV was right in front of me, and they'd get on there and start talking about some company, or their CEO would come out, and I would instantly start trading that security. And you're like, wait a minute, why am I trading this thing? I know nothing about it. I barely even looked at the charts. I was just buying because someone on TV was talking about it. That's stupid. I was an idiot for that back then. Then you start to realize, okay, what's moving price? It's supply and demand. Oh, that was creating the supply and demand. That's why it moved. And then you start to whittle down to what really matters, which is, this is a business. I have to treat it as such. I want to make sure that what I am trading is safe-ish, right? Nothing is ever going to be 100% safe. However, I can help minimize that risk, again, by creating these watch lists and making sure that the securities in there are good. We're only up to 65. That's wonderful. 60, yeah, it's only 66 now. Making sure the securities I have in here are ones that are liquid, they move enough for me, and in my case, I make sure that none of them are in pharmaceutical or drug stocks, and none of them have been in there yet. Semiconductor, software programming, and Apple. Of course, Apple will be removed. I saw someone make that comment earlier. Tom, any other questions? You had, let's see, you had an options question, I think, earlier. Where was that one? No, maybe not. Maybe I just missed it. Oh, trading options on the SPX gives me a number of ways to trade, including expiration from 0 to 45 days, bearish, bullish spreads on. Yep, exactly. Well, and Tom, pat yourself on the back. You are more advanced than most people in the trading world. Most people, especially as the gateway drug to financial markets, they start off with stocks, right? So they don't have that flexibility. If it goes sideways, there's nothing they can do to make money. Nothing. With options, if it goes sideways, okay, I have tons of opportunities to make money on those trades using spreads and different strategies. So very different with options traders versus equity traders or futures traders. Now, even Forex traders. CNBC pump when they speak. I used to, yep. One of my funniest trades ever. It was funny for whoever was on the opposite side of my trade. It was Steve Ballmer, who was the outspoken guy from Microsoft. I don't even know if he's still there. But I was sitting at my desk one day, and Steve Ballmer comes on CNBC. So I leaned back, and I was just like watching him for a second. And they asked me, what do you think about your company? He's like, we are doing better than ever. Our company's amazing, this and that and the other. And he was just nonstop positive. And I'm like, shoot, I better buy some. So I bought 1,000 shares, and it started. I noticed that it was ticking up and had a nice run into the time when he was speaking on TV. And so I bought 1,000 shares, and as soon as he stopped speaking, Microsoft absolutely fell apart. It was just like the bottom dropped out. I took multiple $1,000 loss on this thing in a matter of seconds, and that right there made me realize that you shouldn't watch CNBC. If you listen to anything that's on CNBC, it may already be priced in. Now, for a lot of these programs you see on TV, for example, you watch Mad Money. That's scripted. That's BS. Mad Money is not live. It is not. It may be live, but it's all scripted. Like, they have fake callers. They have fake analysis on stocks. Hey, can you talk to me about this company? There's no way Jim Cramer knows every single thing about every single stock. It's scripted to a point, and he does his animated, blah, blah, blah. When I was on CNBC, they asked specifically, what will you be talking about? And I just send them a list of the things that I said, I'll talk about whatever you want. Like, that's not how we work. I'm like, well, this is live, isn't it? No, you just let us know so we can ask you the questions. I'm like, well, shouldn't your like news people ask questions that they want to know? Not the way it works on CNBC. Basically, they asked me, they said, give me 6 or 7 things that you're going to talk about, you'd like to talk about. And I'm like, okay. So I gave them a list of all the things I was going to talk about. That's already public knowledge. So you can find out if a CEO is going to be on CNBC or Fox or Bloomberg, right? It's very easy to find out. Now, I ask you this. When was the last time you saw a CEO of a publicly traded company, let's say it's Maria Bartiromo, right? So all of a sudden, you've got the CEO for Amazon, was Jeff Bezos. Let's say Jeff Bezos comes on, Maria Bartiromo live, Squawk Box, whatever channel program it is. And Maria's like, well, how is Amazon doing, Jeff? We've been watching the stock. It's been selling off. And Jeff Bezos goes, our company's screwed. I mean, we are in really bad shape. Our financials are so bleak right now that I talked to my CFO, and he said he was thinking about committing suicide. It's that bad. I mean, our company is really in turmoil. If I was an investor, I would unload. I would get out of our company right now. Our company's really trash, right? It's just garbage. When's the last time you heard any CEO say anything even close to that? Instead, it will almost always be the CEO going, Amazon's in a great place right now. We've been doing a lot of horizontal integration, streamlining our operations. We brought in some really top-notch leadership. We're expanding into China. We're looking to buy this and this. Our growth rate, annual compound growth rate has been increasing. Our profit margins are increasing. We are doing so good right now. Now, that's what you're going to see when they come on CNBC. So remember that. Anytime you see them on CNBC, it's a pump opportunity. It's a PR opportunity for anybody to pump their own wares. Caveat emptor. Sorry to say that, but I loaded the list with industry and volume average in under 30 seconds. I have huge RAM. I have 32 gigs of RAM on this one. I'll be honest. If you're using Michael, if you're using TradeStation version 9, that's probably my problem. This is an old version. I'm legacy and I like the old version. If you're using 10, it'll probably be done in seconds. I might just update just for the hell of it, but I just always like this version. So, yeah, this computer up here is badass. It's got tons of RAM, an amazing processor. I built this specifically for broadcasting because you guys might remember when I started this after Power Trading Radio stopped back in February of 2020, I was using my home computer. It couldn't handle it. Remember, we kept crashing and having all these buffering issues. And then I went out and I built a custom computer. I made sure that every component was built for streaming media. I did a bunch of research, and this computer's been pretty flawless ever since. I had one internet hiccup, but I fixed that one now. Jenze says, I like you're buying a car. How about the blue one? That's great. Yeah. Well, yeah, it's like the car salesman. The car salesman's not going to look at you and go, I wouldn't buy this car. This car's junk. It's trash. They're going to be like, you look great in this car, right? Never trust CNBC, Fox, or Bloomberg, any major source of financial news. There's usually a vested interest. Huh? Wow. Strange, Michael. I wonder why. I mean, like I said, my network is solid. I mean, I'm streaming right now here. I can even show you the speed test. It's pretty darn good here. But anyway. So there you go, Tom. I'm hoping TradeStation will turn this into a 60-minute show. What happened to Big Eb? Did he finally just get bored of the show? He take off? I thought was he moving? We miss you, Big Eb. I don't know where you're at. I told TradeStation I won't upgrade until they allow custom shortcut buttons. The 10 version doesn't allow it. Of course, they don't care. They don't care. They do not care. All right, cool. Well, that's going to do it for Tom's question, unless somebody has any comments or feedback. I'm hoping I answered it, Tom. I don't think that there's a win-win. I do think that if you, for those that don't focus on one or two things very well, I think trading's harder. I really think that, hey, Rich, good to see ya. I really think that if you focus on one thing or two, make it no more than 5 things, you'll really start to learn a lot more about the dynamics of those instruments. And I think that will make you a better trader overall. So, focus on a few things. And Tom, rightfully so, puts in different markets. Natural gas. Maybe you want to be a natural gas expert. Well, if you are a natural gas expert, you damn well better watch the shows with John Rowland and pick his brain, because that guy knows his stuff. I mean, he knows every time he comes on, he mentions something. I'm like, I did not know about that. I'm making notes so I can like improve my understanding of natural gas and different commodities. You know, SPX or looking at the yen. Well, you better know what everything that's driving the yen forces. I particularly, as I mentioned, love ETFs that are diversified because I don't have to worry about as much of an influence from one particular company or commodity. All right, let me see. Do I have any other questions for today? I did. So let me, I'm going to do the market thing, and then we'll come back and do some more questions. Here are some, I went and dug my ETF index out of CliK. There you go. There you go. Yep. And when you do that, Tom, make sure that you look at all the numbers. So for example, let me just real quickly create here, go insert, we'll make a new list. I will format the page and make this gigantic for you guys. Let's go with 20 font, right? And hit OK. So, when you do this, you do your XLE, XLF, XLY, XLI, XLK, XLU, SPY, QQQ. I'm getting the major indexes in here as well. Oops, not IWN, IWM. And look at all the volumes today. Let me delete this and kind of make this a little bit cleaner for you guys. Let's go format analysis techniques and get rid of all this fluff that we don't need. I'll get rid of the volume. We'll go to volume average so we can see what that's been like over the course of time. And what else do we put in there? I don't need to worry about industry or sector. The one that I don't need to worry about is the healthcare sector. Now, I'm okay to trade XLV, even though that's healthcare. I didn't put it in here because that's diversified. I'm not worried about that getting burned by one person. So notice the average daily volume for almost all of these is well above my target. It's well above 1.5 million. The weakest in here on a daily basis is the Dow Jones Industrial Average. Fine, I don't usually trade the Dow. If I'm trading these, the SPY and NASDAQ are usually my go-to, and look at those, 69 million, 53 million. You're plenty liquid here. But maybe you add in a couple of others, maybe IYR, as I mentioned, real estate. That one's going to be a little on the low volume side, 5.2 million, but plenty of opportunity. I could add an ATR and do all those other things we just did, but now you have here a watch list of 12 things that really give you a pretty broad representation of all segments of the U.S. economy. Now, maybe you want to do things internationally, right? So you go, EWW. Right, so here we have an ETF that is international. Notice 1.9. And I can actually go in here and just, for those of you who may want this, you can go format analysis technique, and I can click on industry, and that should actually tell me, it should say it. No, it doesn't give the industry. I think you can come up with the name. It'll say name, and it'll come up with the company name, and it'll tell you exactly what it is. And that may help some of you as well. Let's see, company, category. There you go. I think I just passed it. Nope, did not. Oh, anyway, add in a couple here. Just make sure that it gives you that liquidity that you're looking for, so that you don't get caught off guard with something that's very illiquid. So, and again, you can do this on pretty much everything. Eliminate hard to borrow. So Miles, that's a great question. Most of the time, if it's under 1.5 million shares, it's hard to borrow. It's very hard to borrow normally. So all of these are going to be fairly okay to borrow. It should not be an issue. EWW might be you might have to ask your broker, but you don't have to worry about borrowing SPY or QQQ or XLF. I mean, these are so liquid, no worry about it. If you put in something like, I guess you could be throwing your Bed Bath & Beyond. Well, Bed Bath & Beyond is going to have huge volume over the past, but really wouldn't want to go with this one, and they may call this hard to borrow because it's a meme stock, right? It's just being pumped and dumped right now. Probably want to stay away from that one. If it's something that historically has very little show, what was NVS? I think that was the one we looked at earlier. Oh, NVS actually has 2 million shares traded today. Major drugs. Nice. Yeah, I would certainly have on my list stocks that are borrowable. Definitely they're borrowable. Merlin, like you recommended John Merlin for natural gas. Who may you recommend one to follow for gold XAU? Well, I mean, O'Donnell is the gold bug. However, I think sometimes he can be a little bit biased to the long side with gold. I've had a couple guests in the program, and I'm drawing absolute blanks right now. One was from CliK. CliK Gold was a good one. And yeah, I've actually been meaning to have the guy on. He was a silver and gold guy. Generally, when I bring people on, it's people that I respect, which of course is why I don't have Sam Seiden on the program. You guys all know that. There's no respect or love there at all. I don't know, Emo. I'm not sure who I would say. I can't think of his name. He's been on this program one time. He was on Power Trading Radio a couple times with regards to trading spot gold. But it's really, one of those guys that understands miners and the extraction costs of gold and really looking at the big picture. And that's certainly way beyond what I like to look at. All right, so let's look at what happened today. Start things off with what happened in the U.S. The unemployment claims actually ended up being fairly good. We were less than before, which is a good thing. They expected it to go up, so that was a positive catalyst. And I think that might have been part of the reason we saw the markets do what they did today, which was have a nice little rally to the upside. You had Jerome Powell speak. Remember, yesterday you had Brainerd and Barr speaking, and that was interesting because they were both very pointed towards the Senate, Congress about cryptocurrency and stablecoins. And it wasn't like, hey, we got to ban this stuff. It's saying, listen, we just need to get it under control and make sure that there are rules wrapped around it so that the investors are protected. So to me, that's a really good thing. Next week, we have the Ethereum merge on Thursday, which is going to be really interesting. I'm excited about that, and moving my cryptocurrency today just to make sure I capitalize on the hard fork. Otherwise, as far as economic announcements, there really wasn't too much. I was kind of surprised to see this consumer credit number, but I personally want to dig into this deeper because I don't see consumer credit dropping. Although the number here says it went from $39.1 billion to $23.8 billion. Okay, everybody I know seems to be just maxing out those credit cards and still spending as layoffs are starting to become more and more present in our market. Let's run through real quick and look what happened. Earnings-wise, there was nothing that special, but we did have some weakness in gold today. I was kind of surprised it was... It's been pretty much running with the market, so surprised to see gold look as weak as it did. It was down 0.49, and that's as of right now, which of course is rolling into the next trading session. Here's your NASDAQ. NASDAQ was up 0.48%. A lot of intraday volatility, a nice run near the end on it. I still am long, so I told you I bought some call options on the triple Qs and the SPY. So we'll see if that gets me back into green. I'm underwater a little bit right now, but it's fine because I got over 90 days till expiration on those calls. Dow was up 0.6%, but the picture for all these indexes, it came right down to this kind of rally-based rally that went back to July 18th. Bouncing off that one right now. Same thing for the S&P 500. It tiptoed below that line, actually closed below it, which was not good, but has rallied ever since. Right now, the real target is 4030, which is about another 25 points in front of us. After that, we're looking at 4200, which is where I am hoping we get back up to. Russell 2000, 0.82% gain on the day, but same picture as the major indexes. Crude oil was an interesting one. Crude oil, obviously, if you saw the inventory numbers today, I would have expected this to be down. I'll show you the numbers. They were expecting a contraction in crude oil inventories of 2 million barrels. It was negative 3.3. They expected negative 2. So while it's improving, it still is showing that we're consuming a lot more oil and we're losing oil. Instead, we came out at 8.8 million barrels positive. That is a 10.8 million barrel difference. Jaw-dropping at how unbelievably different those numbers are. And you guys remember the show with John Rowland a while back where I was making fun of that, and he was talking about how it's calculated, like going by with helicopters and scanning the tanks to see how full they are. They may as well ground those helicopters because they ain't fooling nobody. I mean, this is... The previous week, they were spot on at 3.3. I couldn't believe... it was like, buy a lotto ticket, guys. You actually nailed it at negative 3.3, and now you're off by 10.8 million. Wow, bravo. Congratulations on being so colossally off. And finally, Bitcoin. We are in a very precarious place here. I know that some of you guys are bullish on Bitcoin. I am bullish long term. I did buy some more recently, and I will probably continue to buy more, just dollar cost averaging. But it's still not out of the woods. It looks really bad at this point, even though we have two little bounce days off of this low of 18,300. And by the way, that line's been there, guys. This line has been there, and the reason it's there is because it's back to this low that goes all the way back to December of 2020. That's been my line, my target, my expectation for it to come to, and we have been kissing that one. So we get down below that. there's a level right around 13,000 and also another level around 10, but we'll have to wait and see how that one pans out. Not looking so great yet. Ethereum has been kind of the talk of the town. We are going to have a fork of Ethereum next week, which I'm excited about. It means I can make some free money. Who doesn't like free money? Yes. Yeah, generally when you have a hard fork like this, a contentious hard fork, there's free money to be had. So we'll see. I'll let you know exactly how much free money I'll make on the Friday show of next week. But Ethereum, even though it had this really nice rally, slight little pullback now, we've got to get back above 1,700 for this thing to really have any legs. If it breaks 1,700, which I think it will do by next week, we'll probably see this thing crush that $2,000 mark. And that is your major markets. I did look at the dollar index here, which really didn't do too much today. Just kind of a long-legged doji here near the top. And then finally, let's go look at the another major important piece for our markets, which is U.S. dollar, and it also just kind of traversing sideways for the past couple of days here. Tom says, it seems like the Fed has somebody speaking almost every day now. Is it me, or are they grabbing for the spotlight now? I think they're grabbing for the spotlight. Absolutely. And real quick, let me bring up this number for you, just because I still, believe it or not, I still am in the camp that we're going to have a 50 basis point increase. I think 70 might be a little too aggressive, but here are the numbers right now. It's been increasing. Right now, there's an 86% chance of a 75 basis point increase in that September 21st meeting. So I'm definitely the oddball out here at saying only 50% or 50 basis points. But notice it's been increasing. A week ago it was 75% chance. Now it's 86. A month ago it was 68%. So it's slowly ticking up. And I may be wrong this time. I've been right the last three. So we'll see. This is a long shot. I'm starting to fall out of favor. Powell said he'd be aggressive, right? But I think that part of that is you set that tone so people are expecting it, and then when you don't, it makes people feel warm and fuzzy, and you get another pop in the market. Just my idea. I as you guys all know, I just don't trust it. I think that everything out there is particularly nerve-wracking. One last little piece here. Can I do it today? Tom's not here. Big Eb's not here. I can go an hour. That's fine. There's two things, and I think they're both from Michael. So Michael says, can we check out SoFi? So here's SoFi Technologies, and here's the question. Just wondering if you could take a look at SoFi, and if it is in a demand zone, so that maybe we could ram a few points, go short, Niners all day. You and your SoFi. I think I may even have it still here. That's the team right there. Right there. See, I would say thanks, TJ, for giving me the Niner sign up there, but there it is. There's the Niner sign. All right. SoFi at demand. Well, I mean, look at it. It looks pretty bleak. I mean, this really does not look that great. I would argue that the demand zone is still a little bit lower, right? If you're going to look for demand zone and say that we're in it, for me, it's got to get to here. Now, this is going to bounce because I'm on snag mode, but to me, that's your demand zone. Are we close enough to call it a demand zone? Yeah. Ooh, damn you, Tom, Santa Clara Niners. Yeah. I get it. So, I still personally be waiting for this $5 level. It's bouncing good right now, so, it could be the beginning of a big move, but I would just be patient and wait. It still looks like it's really weak here. If we go bigger picture, it's kind of interesting. You are really kind of in this just a big range-bound piece here, and you're kind of in the middle of it. So I would shy away from that one right now on SoFi. Now, last question, and then I got to wrap things up. I try. What are your thoughts on everybody saying the market hit the 61.8 level and are perhaps excited to see it go green again? Okay, well, I guess it depends on what you're looking at, right? Because there's an old adage I love to say, which is if you torture a chart long enough, it'll tell you everything that you want to hear. So let's get some of these lines off my screen. I'm trying to keep most of them here. I'm going to keep this downtrend line here just because I like that one. I'm going to keep this this angled red line that goes up because that was, I believe, when the yield curve inverted and markets tended to drift up. So I was kind of seeing if we actually would get to that line. And then I've got some other demand zone roughly mapped out. So I'm going to just do the fib. And I guess the question is where? Do we go from where it started to where we peaked at? Well, 61.8, we're not even close to it. 61.8 is all the way down here at roughly 3,100. So it ain't that one. Now, some people would look at it and say, are you referencing the fib from where it bounced off of. So we did rally up to the 61.8, but that's a pullback into supply. This is actually a great pullback, right? You have this fib line right here, and if I put a horizontal line right on the 61.8, you guys see what I'm talking about? Here's 61.8. I put it right there. That's like pretty much where we peaked, and it was the downtrend line. So this is like a double whammy of reasons why you would want to be going short right there. Now what you're referencing here, Brian, I'm not sure what you're referencing, but maybe you're looking at this most recent move. And that, in fact, is a 61.8% retracement. So, sure, it could be a 61.8% retracement. What I would argue is if you're making all these move assumptions that 61.8% is the magic number here, then we have to do the same thing here. We have to do the same thing on this move, and that would give us a target at 618 right around 41.60. Everybody with me on that? That makes sense to everybody? Basically, all I'm doing is just taking the same analysis that he's using on all these moves, which have been 61.8, and now just extrapolating it, saying if you think it's going to bounce up, where's it going to go? Well, if it's still in a downtrend, I wouldn't expect it to go all the way past the peak at 4,300. I would expect it to come back up to that 61.8, which is right there. And, 4,200 was kind of the area I'm looking at if, in fact, we get legs here. But I just don't know. It's been so wild and so weird and choppy. I think you'd all agree. It's been a rather difficult time. This one particular up move right in here, I was actually doing pretty good, and then that cost me. There was some, definitely gave back some profit there, although this week I'm doing significantly better in my trading, so offsetting those last 2 weeks, which is great, although we have to wait one more day before I can make that claim. So anyway, there you go with the fibs. And again, I think people always look... See, you shouldn't have reminded me, Michael, because I'm going to end it. Here is your economic calendar for tomorrow, 9/9. The double Germans. We really have a bunch of FOMC members speaking tomorrow. As Tom pointed out, you got Waller and George speaking. Who knows, might get some more cryptocurrency stuff there. Wholesale inventories come out tomorrow. That's expected to remain right where it's at, so nothing big there. Canada, all the numbers are pretty much showing really nothing exciting. So I don't have anything really noteworthy to say for tomorrow, other than Larry Jacobson will be... you want to extend the blue line? See, there goes the hour show. Larry Jacobson will be our guest tomorrow. I wonder if I can just... I think you can... let me go here. Extend right. There you go. We'll just leave that right there. There you go. Leave that line. Larry Jacobs is going to be the guest tomorrow, hopefully, if he doesn't flake on me. But I'm not even sure what we're going to talk about. Larry's always fun to have on the program. If there's something that you want Larry and I to talk about, do me a favor, put it down below the comments on the YouTube video. I appreciate those who have been leaving the comments. Thank you very much. Especially those that, find value in it or suggest things that might, for guests, etc. I love when I get that kind of feedback. It definitely helps out. And hopefully I'll have the audio dialed in. It's the weirdest thing with the audio here. I just don't quite understand the audio. And I'm an audio person. I'm a geek. But yes, we got an hour show. You're welcome, everybody. I'm going to go downstairs and have a very cold beverage because it's hot. I'm going to go watch some NFL football tonight. Cheers, everybody. I hope you all enjoyed today's show. Maybe learned something along the way. Again, if you have anything personally you want to talk to me about, TraderMerlin@gmail.com is the easy way to do that. If it's topics or anything like that for my guests, put them down below the YouTube video. I think that helps out. Hit subscribe, hit like. I will see you all tomorrow. Take care, everybody.